All right. Good day, good day, good day. All of you that's watching this broadcast via our YouTube channel. If you're watching this and you have not subscribed, please, please, please go ahead and subscribe, share with your friends and your family. Let them know that you are affiliated or have access to a group of entrepreneurs that teach folks how to minimize their taxes legally and how to increase their cash flow in their jobs by correcting their tax withholding. All right. So I'm going to go straight into this training on today. So, one of the best ways to improve your personal finances is by increasing your cash flow. I didn't say your income, I said your cash flow. Restructuring your expenses, such as minimizing your taxes, is a great way to increase that cash flow. Debt elimination is a great way of increasing that cash flow. And that can dramatically improve your cash flow and provide you with tons and tons and tons of solutions to your financial problems. One of the best sources to start the process for obtaining extra cash flow is indeed your W 2 employee, for the W 2 employee to correct their W 4 form. That means if you have a job, you ought to revisit your W 4, apply what I'm showing you. So if you don't have a business, do not do this. But if you do have a business, no matter if it's in business with me or not, as long as you have a business, this will work for you. No matter if it is my business or not. I want to give you all this disclaimer. If you decide to apply what you see in this video, I am not liable if you owe taxes next year if you do this without having a business and you're just looking for a way of getting your money fast. All right. So that disclaimer is out there. Hopefully everyone understand what I'm saying. I do not hold any liability to anything you decide to do with this information if you are not a part of my TMT community. All right. I know if you're a part of my community, you're going to follow this system, process by line per line, process by process, and it's going to be beneficial and rewarding to you the same way as all of the other successes that you've been having since you've been under my leadership. All right. The IRS states that approximately 80% of taxpayers overpay their taxes with an average refund of about $3,000. This is facts. This is what they said. I'm just telling you what they said. This W 4 training will indeed provide you with education to shift those tax dollars back into your pockets, which will create positive cash flow that can be used for a few different reasons. One is eliminating your debt, two is investing, or three, improving your lifestyle. What if you could eliminate debt, minimize your tax, eliminate debt, invest that money, and improve your lifestyle all at the same time? Wouldn't that be beautiful? So that is what I want to show you on today. The W 4 calculator helps you identify your tax withholding to make sure that you have the correct number of taxes being withheld from your paycheck. There are several reasons to check your withholdings. Checking number one, checking your withholdings can help protect against having too little taxes withheld and facing an unexpected tax bill or even a penalty at tax time next year. At the same time, with the average refund being about $3,000, you may even prefer to have less tax withheld up front and receive more in your paycheck, which is what we recommend within our community. All right. So let me run by this disclaimer again, just so you can get a visual. My econ, TMT, Wayne Brown, or none of our other leaders does not guarantee that you will receive an increase in your paycheck by adjusting your W 4. We've seen people increase their cash flow by $200 to $1,000 on average. Even sometimes I heard seen reported that some folks has increased their cash flow even more than $1,000. It just depends on their personal finances on that job, the hourly rate, how much they get paid per hour. There's a lot of different factors in that. What is their tax liability for the year? If they have a business, if they don't, if they got applied credits or deductions, or, all of those things is factored in into our calculation. So I'm going to show you today exactly how to use this system. You take your last pay stub, and the same thing you see me do with this example is the same exact steps you take with your pay stub in hand. This is very, very cut and dry. It's straight to the point. If you can read, you can succeed. This is a great way of building your business by shifting your income first, repairing on your credit first, then share with your friends and family what you've been able to do for yourself. And I guarantee you, they're gonna say, "Man, how do you do that? I want to do that too." You say, "Hey, you gotta have a membership so I can introduce you to this community, and we will teach you every step of the way." They're gonna say, "Okay, where I sign up, where I get started." That's the easiest way to build your business. And every time you do that, you make up to $76. Results will vary based on each individual's unique financial situation. All right. So let's speak about our example on today. We have an example of a family status. I kind of use this because it's typical amongst most families. There's a husband and wife, kids. All right. So we have the Johnson's family today. We got a husband, a wife, and 3 children. The husband earns $50,000 per year. The wife earns $55,000 per year. Children are ages 7 and age 10, and they pay $6,500 in child care for the year. Robert Johnson and Kim Johnson, each the husband and wife, gets their most recent pay stub to answer the questions from the W-4 calculator. To find the W-4 calculator, which is officially called the Tax Withholding Estimator, open Google, search in your browser, type W-4 calculator in the search bar, click search, click Tax Withholding Estimator for the Internal Revenue Services. As you see, what we teach is IRS approved. We go on their website using their software to educate our downlines or our prospects on how to put their money back into their pocket. This is not illegal. So I want you to see this. But people don't educate us. Our families don't know it. Schools don't teach it. Our employer don't want us to know. So that's why people need us. Does that make sense, y'all? So you will be taken to the tax withholding estimator page, which looks like this. Read the recent tax law changes for taxpayers who itemize. If you itemize, if you don't itemize, you can skip that part. And inside of the software that you're going to see is going to have a choice there for you to claim standard deductions or itemized deduction. My recommendation is whichever give you the highest deduction, that's the one you take. So if the standard deduction is $12,900 for a single individual filing their taxes, and you itemize and it's $10,000, then you will of course take the most, which will be the standard deduction. Read this before you begin. Click use the tax withholding estimator that's right there outlined at the bottom of the screen. Once you open that screen up, it's going to take you to another screen that looks like this. There are 6 sections in this withholding estimator. So there's an about you section, is the information that best describes how you anticipate filing your tax return. Remember, the key word is anticipate. So this is most accurate when you follow the system with the with your last pay stub in hand to put in the most accurate information from the last pay stub. All right. Don't be trying to go back 3 months ago before you lost your job and use that pay stub, because it's not going to be as accurate. All right. So the Johnson status is married filing jointly. So we're going to put that married filing jointly. Simple, simple. No one else can claim that they claim the Johnsons as a dependent on their tax return. So when it says, may anyone else claim them, we put no. All right. The next screen is going to be 205. All right. So it's systematic here. The Johnsons will be claiming their 2 children as dependents on their tax return. So we put yes under dependents. We put 2 because there's 2 qualified dependents. Both Mr. and Mrs. Johnson will hold a job with federal income taxes being withheld. So yes, we're going to put for number 3. Both expect to hold 1 job each. So we're going to put 1 for Mr. Johnson and 1 for the spouse, which would be Mrs. Johnson in our illustration. The Johnsons do not receive pension plans, so we're going to put no under the pension section there. Then it's going to take us to the last portion of the About You. The Johnsons do not have any sources of income or any tax payments, so they leave all of these boxes unchecked. The Johnsons do not fit any other demographics that's listed below, so they leave all of these boxes unchecked as well. Then it goes to the next part of the estimator, which is income and withholdings. The income and withholdings is the income and withholding for each job you earn income from this year. Mr. Johnson plans to hold his job the entire year. Mr. Johnson is paid twice monthly. Mr. Johnson most recent pay period ended on 2/19/21. All right. So we just put that information in the corresponding places, and then we get to our next page. So Mr. Johnson earns $50,000 per year. So right there was just enter the total wage you expect to receive this year, but $50,000. Notice the key word there was expect. All right. So you want to have this most accurate as possible to get that shift in your income. Mr. Johnson does not accept any bonuses. Year to date, Mr. Johnson has paid $524 in federal taxes. From last check, Mr. Johnson has paid $131 in federal taxes. Mr. Johnson does not contribute to a 401k or a cafeteria plan, so we're going to put no and no there. And you can see where the year to date will go, as well as the per pay period, where their number will go. So on your individual pay stubs, you're going to do the same exact process. They click the plus button to add the spouse. So Mr. Johnson is going to click that plus button at the top. Now you can put in his spouse's information. So Mrs. Johnson expects to hold her job for the entire year. Mrs. Johnson gets paid twice monthly. Her most recent pay stub pay period ended on 2/19/21. She makes as well $55,000 per year, and she does not expect any bonuses. So we just put in all of her information as well. So if you're married, you got a spouse, you file taxes together, then you will do this. If you're married and you file separately, then you won't have to add your spouse to the estimator. All right. Year to date, Mrs. Johnson is paid $624 in federal taxes. From her last check, she has paid $156 from federal taxes. Ms. Johnson does not contribute to a 401k or any cafeteria plans. So you'll leave that blank or say no, and then you will clearly hit next. Then it takes us to our adjustments, which is section 3 under our estimator. Okay. The adjustments to income are adjustments that will have significant impact to your tax obligation. Most working class Americans do not know that they can make adjustments to their income. This is why they need us to educate them on what's accessible to them that they may be unaware of. All right. So the Johnson family doesn't know if they have any adjustments to their income. So they opt to see the adjustments. The Johnsons realize that they do not have student loans, they do not have educator expenses, and at this time, they do not have an IRA. So they're going to leave that section blank. The Johnsons do not have health savings account deductions. Um, they do not have any moving expenses, alimony that was paid, penalties for early withdrawals, or business credits at this point in our illustration. The Johnson family does not have any adjustment to the income, so they leave all these boxes blank. And then they simply click next. All right, then that takes us to our deductions from income. The Johnsons qualify for a standard deduction because they're filing joint and married and jointly, $24,800 in this illustration. The Johnson's family does not have more than 24,800 in itemized deduction, so it is just recommended that they will take the highest deduction, so that would be the standard deduction in this case. We hit next, it takes us to our tax credits. The Johnsons qualify for tax credits for their dependents. Tax credit subtracts directly from their tax obligation. So click to see the tax credits. So you will hit the plus sign, it will drop down, and it'll show you the tax credits. So the Johnsons have 2 children that's under the age of 17. So we're going to put 2 in that first box for the qualifying children under age 17. The Johnsons have 2 children that qualify for child care tax credit. So we're going to put 2 that qualify for the child care tax credit as well. Then we're going to continue on. The Johnson paid $6,500 in child care. So enter the estimated enter an estimate of your work-related child and dependent care expense. That's where the child care would go. The Johnsons do not qualify for earned income tax credits, so because they make too much income. All right, so they will not get anything for that. The Johnsons do not have foreign tax credit, educational credit, retirement savings, or homeowners credit. Okay. The Johnsons do not qualify for elderly, disabled business, alternative minimum taxes, energy sufficient vehicle taxes. They does not qualify for any of these things in our illustration. So once we're done, we'll see a screen that looks like this, which comes to our results. So the results will show you if you will owe or receive a refund. Based on the information that's related to the Johnsons, we have a tax obligation of $3,393. The Johnsons, $3,993. If the Johnsons do not update their Form W-4, they will pay $6,888 in taxes, and they will overpay by $2,895. That equates to $241.25 per month that they are overpaying in taxes. All right. So let's see what happens when they become a My Econ associate. This is where all of you can make the adjustments since you are a My Econ associate. So we're just using the Johnsons as an example so you can see how this process works and how it can benefit you and your family, your finances, and give you that increase in the cash flow that we all been talking about. So as My Econ associates, the Johnsons learn about the advantages of investing into their 401k, as well as starting a home-based business. So they decide to invest the $2,892 into Mr. Johnson's 401k plan. The Johnsons click on the income and withholding link again, so it takes them back to this page. And Mr. Johnson changes his answer, and now he says yes to a 401k, and he take the contribution of $2,895, and that's how much that he's contributing, anticipating contributing to his 401k. All right. The Johnsons then decide to get started in their home-based business called My Econ. The Johnsons click on the adjustments to income link. The Johnsons estimate that they will have at least $5,000 in Schedule C business losses. You too should at least be conservative at this point until you start building your business, you start using your cash flow manager, and you see what your expenses are for the year. Then you can always go back into the calculator and make adjustments. But be conservative. $5,000, not a lot of money to take in a loss for a business. The Johnsons enter $5,000 in certain business credits for reservists, performing arts, and fee-based government officials. So now when we go back to our results, you will see some changes in the numbers. The Johnson click on the results tab after making the changes to the 401k deduction and the adjustments to the income to see what changes, if any, has occurred. By investing into their 401k and starting a home-based business, the Johnsons now have a tax obligation of $3,045. The Johnsons picked up an extra $948 in tax savings by making these two changes to their W-4. So let me make this make sense. Because the Johnsons learned how to shift their income with two simple strategies, they was able to improve their finances in three different ways. The Johnsons redirected their tax overpayment into their 401k. That was the first thing they did. That was smart. Mr. Johnson's employer matched the 401k dollar for dollar. Investing into the 401k and starting a home-based business lowered their taxes by another $948. So when you add up the contribution to the 401k, plus what the employer matched dollar for dollar, plus what they cash flowed by minimizing their taxes, that's a total shift of their income of $6,738. What if you went to someone and you showed them how to do this, but you got to have a membership to do this? We got to make this legal, so we got to help you build a business and generate some income so you can offset your tax liability. Are you satisfied? Ask the right questions. Are you satisfied losing what you're losing in your paycheck every pay period? Are you satisfied waiting all year long for your money? Are you satisfied having to rob Peter and pay Paul when you don't have to? Most of the time, people are like, no, no, no. Absolutely. So let me help you change that. Here's the options. You can get involved today for $99.95 up front, give you our most popular membership. And I'm even going to throw in our travel club, which is $139.95 by itself. I'm going to give that to you for free, no additional cost. Give you 30 days. Let's start applying what I'm showing you today. 30 days later, we want to calculate how much money you cash flow. Then there'll be a $54.95 maintenance fee for everything that we're building with you per month, 30 days from today. Come on, you see this for yourself. If you cannot make $154.95 in 30 days by applying these strategies, I will give you your $99 back, considering you made an attempt to generate business activity. All right. Considering you made an attempt to use the products and services and the strategies that I'll be teaching. So if you're out there on Facebook land, or on Zoom, on our YouTube, please get back to the person that shared this video with you. Get back to your upline if you are one of our associates and you still need some clarity on how to use this estimator from the IRS.gov website. We are here to assist you and to ensure you have great levels of success and that you too will have a success story to share with your friends as well as your family. So we'll see you at the top because the bottom has definitely been too crowded. Once again, my name is Mr. Wayne TMT Brown. I'm the founder and CEO of Freedom Financial Services, LLC, brought to you by none other than My Econ Incorporated, which is our affiliate company, our mother company to support everything that we do, which hold an A+ rating on the Business Bureau. And we got a mission to create 1 million millionaires. And we want you to be one of those millionaires alongside of us. Be blessed. I look forward to speaking to you all soon, working alongside of the person that introduced you to us. But most of all, I want to encourage you